Alright, these are I made 1600 bucks today across 2 phone accounts. 3 trades. This is a lot of bullshit, but it was basically 3 trades. Coming into market open, pretty straightforward. You know, you see London manipulating to the downside. You see this hourly liquidity, fill this hourly imbalance. Also fill this 4-hour imbalance. We obviously respect it. So we're looking for a London reversal, New York continuation. These are the obvious draws of liquidity for today. We have London highs basically, and these hourly highs as well. Session highs. Coming to market open, we inverse this 1 hour fair value gap. I marked it out anyways. In case we come back to it as we did here, kind of like a BPR. Not really, but you know what I mean. So I'm bullish on the day, even though I don't like this chop. Price is not having a strong reaction to the upside. So market open, push to the upside. Push to the upside, take out some of this low resistance liquidity. We end up chopping, we sweep this previous manipulation zone. Whatever. We sweep all this manipulation here. And usually this is not enough to enter a trade, but we have been doing this for the past few days. Well, we don't sweep important lows. You know, we don't come to like these 5-minute lows, anything. We just take out this, you know, as long as we take out some form of resistance, like some form of liquidity. Now you see here, market open, take out to the buy side, some low resistance. We take out some liquidity from the sell side. We tap into that hourly fair value gap, we inversed as well. We have a strong reaction. So we create our first 5-minute fair value gap of the session. I'm looking for a retest of it, or because I want these highs to take care of. I'm not expecting, price doesn't really need to, it's all balanced out. We don't really need to come back down here for no reason. Big push to the upside to create this 5-minute fair value gap. On this candle, we obviously respect it. We have, you know, when we have a fair value gap, we want to have a strong reaction off of it. We can clearly see it pushed and it fucking reversed all the way, closed green. So are we in a downtrend? I would consider we were already, you know, in an uptrend. For our uptrends, hourly was kinda but you know, after this inverse fair value gap, 15-minute we're bullish, 5-minute we're bullish, so we dropped down to after this reaction. It dropped to the 1 minute. We have this 5 minutes gap that we obviously respected. Wanted to see some form of 1 minute entry. Beautiful. Inverse fair value gap. You know, see the little sweep. Disrespect. On 2 candles, you see one, boom, second one. I enter. take profits on these daily highs. Stop, I usually put, I initially put below this fair value gap. I had some wiggle jiggle room, but I was like, there's no way we have to come back down here, so I just put. So this ended up being a loss. It was the first trade. Ended up being a loss. I added here because we reacted this 1 minute fair value gap. I thought easy draw on liquidity. No, I ended up being stopped out. So what happens? We sweep. We sweep hourly liquidity here. What happens right after? We inverse a 5 minute fair value gap. Beautiful. Of the retrace. So shit, I was not, that was my draw liquidity. I just had one take profit and we actually, you know, came down for this week. Which, yeah, that was loss number 1. Still a good trade though. Yeah, could have either, after we sweep this liquidity, stops break even, or you could close 50% of your position because it was already a 1 to 6, you know. Second trade, a winning trade, 1 to 3 are whatever the fuck it is, just one contract. This is retarded. This is the winning trade here. Yeah. Second trade of the day. Basically, after sweeping the hourly highs, we get retracement. So, what am I looking here? I'm still looking for this draw liquidity because it's the obvious draw liquidity. Kinda not really good entry, simply because he had not much reasoning. But what happens after I get stopped out like fucking half a second? I got stopped out around here. I see the sweep. I see the reaction. I had an SMT. What he has at these lows. Something like that. Obviously we have, I counted this as SMT. We have lower lows. You know, you could disagree, you could look at this as an SMT. Which kinda makes sense, but NQ would be the lagging index, but we actually did not sweep these low. Actually, can't see now, but we have a 30-second fair value gap inversed here. SMT at the lows, strong push to the upsides after the seek and destroy, obviously, you know. Everyone that was in longs gets stopped out and then run to the targets in 3 minutes. You know, 1 minute breaker structure, 5 minute inverse fair value gap, a 30-second inverse fair value gap, 1 minute break of structure. It was just clear as day. 1 to 3 trades. Third trade of the day. I accidentally closed this. I was not supposed to close this, but I wasn't gonna re-enter. Anyways, I got the 3 trades, I'm out. Still took a bit of money. You know, who cares? Classic sweep brick structure. We sweep out targets. You know, I'm still on the 5 minutes. We get a sweep of these highs. We get the 5 minute retracement, this fair value gap. Some reaction, so we get the 5 minute retracement. And right after we dump, we are not able to break this previous high. So I'm obviously looking for some shorts. This is the classic, you know, sweep, 5 minute retrace, break of structure. We have the 5 minute retrace, boom, retrace, fail to break above the high. We get the 5 minute down candle. I'm not expecting price to push above this again, you know. Drop to the 1 minute. At this 1 minute fair value gap, I'm not really counting it, realistically. We also had SMTs at the highs, obviously. Lower lows, higher highs, NQ is the lagging index. You know, we swept liquidity as well, that's why it's valid. Drop to the 1 minute. You have this 1 minute inverse. I'm not really counting it, but you could. I have this 1 minute. So as soon as we break structure to the downside here. But we have this 1 minute, so I'm just waiting. I have the retrace, boom. As soon as I see that a close strong below, 1 minute break of structure, we had the retrace. I enter. You could put the stops, well, not really above the fair value gap, but above the previous candle. You know, scale here, 1 to 1. Boom, take profit 2. This fair value gap, take profit 3. I wasn't really expecting to come to this low, realistically. You could have. I was probably just aiming for this untouched fair value gap to be hit. This was the trade idea, but obviously I'm unable to execute, so I just accidentally closed here. Still made $200. Kind of retarded. This was, yeah, would have worked out as well. Yeah.